But I want to explore this in a little bit more detail with market watcher Christine Short, former Republican Congresswoman from New York, Nan Hayworth, and last but not least, Wall Street Journal editorial board member Dan Henninger. All right, Dan, the argument is that the Chinese desperately want to avoid a trade war with us, hence they're coming together to cobble something to satisfy the president. Will they?
They will come to the table. There will be a negotiation. I mean, the Chinese are skilled negotiators. They have seen this coming for a long time. I'm sure they have a strategy that they're going to deploy with President Trump. Whether it will get to the goal he wants to reduce the deficit with China is a good question. He's probably not going to reduce the deficit with South Korea. They're announcing an agreement with them today. But negotiating with China is what most of us thought from the beginning of this process when he was talking about tariffs on steel and aluminum. China was the target. Now, if they've moved over to talk to the Chinese, I think that's why the markets are responding so well. At the edge of a tariff war last week, the market went off 700 points. When the tariff war came off this week, it went up 700 points.
No, you're right about that. You know, Christy, the argument has been that the Chinese do fear more than we fear them, and that the message seems to be this crazy president or everyone is going to push us to the wall, and we don't want to be there.
Yeah, it's true. I mean, look, I wouldn't put it past the Chinese to retaliate, though, and that was really what everyone was concerned about last week. I think the exemptions as well for certain countries, especially the European Union, has helped this rally today. But, you know, no matter which way you slice it, we're talking a little bit about the midterm elections and how this might impact. If trade tariffs do go through, you know, you might see an immediate impact on jobs just because of global competitiveness. And as costs go up, it makes steel input companies less competitive. And so that's really the big fear there. Yes, the steel industry has been going down as far as employment for the last couple of decades. It would be nice to add some jobs there, but it wouldn't be enough to offset.
Do you think it'll get to that point?
Yes, but it won't be enough to offset the jobs that you're going to lose in automotives and in aerospace and manufacturing.
So
I mean, they employ 80 times more people than the steel industry does. So that's really the big concern there, and that's why, you know, you saw the big downturn last week.
No, Nan, one of the things that I've also seen is this fear that we'll discover that when it comes to trading partners like the Chinese, they have no clothes. And that all of a sudden they do rig their system, and the 25% tariff on American cars versus our 2.5% on theirs.
Absolutely.
That, you know, people always say the president's igniting a trade war. A lot of people looking at this are saying, well, wait a minute.
We're already in a trade war.
Right. So how do you think this plays out? What do you think the Chinese do?
We all know their mercantilism has bordered on the grotesque in a lot of ways. I mean, any company that wants to do business with them, American or others, we know they steal intellectual property. We know they have punitive licensing terms. Everybody agrees something needs to be done. So to the president's credit, he promised he would do it. He is doing something. Tariffs are a very blunt instrument. They have to be highly targeted, highly selective.
They work for the Chinese?
Well, so long as we let them, Neil, and that's, you know, there is this dynamic tension. Right. You know, we are their biggest customer. You know, they are also our biggest creditor. So, you know, we all have to come to an agreement here. And I think, you know, USA Today, among many others, has said, look, smart way to do it, let's make sure we're partnering with friendly nations. You know, let's revisit a Trans-Pacific partnership. You know, just don't rule it out completely. Work through the WTO. Get partner
we bowed
nations
out of that,
so that we
thinking that it wasn't worth it.
But I think, you know, the president's showing that he is firm when he introduces these tariffs. We know that he's serious about Chinese trade. I think if he decided to reintroduce the idea of joining a Trans-Pacific partnership and the concept of a tough approach to China, I think he'd have more leverage there.
His view has been, Dan, I think, and you can correct me on this, is that, well, Republican Democratic presidents in the past have all tried the nice approach. Let's talk about this and see what we could change, and nothing's changed. So he thinks this more blunt instrument is the way to change it. Do you think it is?
I'm not so sure. I think one of the reasons is not only the fact that it interrupts a lot of international supply chains, but to Christine's point, when you do this sort of thing, what you discover is there are political implications and consequences inside the United States. The Wall Street Journal has a fascinating story today about how agriculture interests across the Midwest
Absolutely.
are terrified at the idea of putting tariffs on China because they export so much into China.
And they believe they're a target, right?
They believe they're a target. I would assume that a lot of them and the people working for them, and Nan mentioned steel fabricators, and Christine was saying
American
auto,
keg.
those are also Trump voters. And if they're going to be damaged by this, the president runs the risk of driving a wedge into the Republican voters out there in the midterms. They have to be nervous about what's going on. I think that's why presidents have always been a little bit careful about these trade negotiations.
Well, that's what the Chinese count on, too, though. That will blink.
Yeah. I mean, in 2002, we have the Bush steel tariffs as a historical precedent. And, you know, those were more costly than they were worth.
They
and
were
we had
dropped midstream.
200,000 people out of work in 2002. And that continued for the next couple of years. And so if you look back at that, it wasn't really worth, you know, what we gained.
And
But
President
wasn't
Obama.
the argument, I just want to follow up on that. What wasn't the argument that was raised at the time it wasn't worth it? This president now is changing it around. It's not worth it continuing to kowtow to them. That he has long argued the Chinese need us a heck of a lot more than we need them. Do you agree with that?
I mean, sure, and we'll find out when this happens.
Sounds like you have your doubts.
Well, I do have my doubts just based on 2002. I mean, the one thing that we had going for us was that, you know, companies are very good at restructuring their supply chains to deal with and make sure that there's diminishing negative impact when we implement tariffs. And we're in a very strong corporate earnings environment right now. Tax reform is certainly going to help this year. So we have a strong underlying economy. I think more than any other time, companies are in a position where maybe they wouldn't have to reduce workforce as much. However, that doesn't mean that they won't. I mean, they'll cut costs. If there are rising costs, they'll either pass it on to consumers or they'll have to.
Well, I don't know how much they can pass along, right? I mean, one of the
easiest thing is to cut workforce.
You're right. But one of the things that we've counted on is that, in this case, the administration wants the Chinese to recognize that they're the ones up against the wall here. But the Chinese might figure, to your point, that well, wait a minute, we can punish you, we can punish your agricultural interests, or we could stop or slow down buying your debt. How likely are either of those in a realistic scenario right now? Because that would be a war. We've escalated it to the next level.
I think the Chinese are probably willing to take risks past some point.